take 15 minutes once a quarter to go through timely industry events. And so we want to welcome you to this version of it where we'll deal with FAQs. We'd also like to welcome our newest addition, Ro Blunt, who's in San Antonio. Ro and his family have been clients of the firm for over 20 years, and he's a fairly recent graduate of SMU Cox School of Business. So very pleased to have Ro on team after a couple of years in the insurance business, and pleased to have him in San Antonio as well as back and forth in Dallas. So Ro, welcome. Glad to have you here.
Thank you so much. Glad to be here.
Well, the topic, as you all know, this morning is frequently asked questions. And what we have found is that over the years, people ask us questions that seem to be repetitive, not repetitive in the fact that it's annoying, but it's common questions that they ask. So this morning, we're going to start off with even the question about C3 financial partners. What does C3 stand for? And in our experience in doing this for many decades combined, most people don't continue their planning for three reasons. First of all, they lack confidence in what they're doing. They don't have clarity of their goals and objectives. And thirdly, they don't have the idea that planning is a process, not an event. So many people think that they've done their wills, they've done their trusts, they've done the life insurance trust, and they can put things aside and not worry about it. But the reality is things change. Their personal situations change, their financial situations change, tax laws change. And so we emphasize that planning is a process, not an event. And the process needs to be coordinated. Doesn't mean we need to coordinate it, but we just want to make sure somebody on the planning team is coordinating the process for our clients. So clarity, confidence, and coordination are what we strive for internally and externally with our clients and advisors we work with. And one of the ways we do that is with a policy review process. A lot of people have policy reviews, but ours, honestly, is very, very unique and unique to our firm and with proprietary tools that we use. So I'm going to ask Celeste to give a brief overview of the process and why it's different.
Thank you, Todd. Our policy reviews are definitely different. And you probably have heard us mention life insurance tends to be the largest, unmanaged, and least understood asset in a client's portfolio. So for most policy owners, having their insurance portfolio reviewed at all is already different. But a C3 policy review differentiates itself by going far beyond just a traditional summary of coverage. It is a thorough analysis that ties into our objective, as Todd just mentioned, of providing clarity and confidence, and consists of two parts. Part one, which is the clarity portion, is a snapshot of key policy information, such as current death benefit, cash value, and other frequently overlooked items that may need to be updated, such as beneficiaries. Part two, the confidence portion, is a deeper dive into the viability and, most importantly, suitability of the policy based on the insured's current goals and objectives, which in many cases have changed from when the policy was originally purchased. During this part of the review is where we frequently uncover policy issues that were not addressed soon enough and that will now negatively alter previous planning. Issues such as shortened policy durations that are now resulting in the insured outliving their policy, and liquidity that was necessary to meet their estate and legacy objectives that will no longer be available. However, many of our reviews result in providing policy owners the reassurance that the coverage is still adequate. But when modifications are recommended, the goal is always to realign the insured's coverage with their current needs, goals, and objectives. If you're interested in learning more about our policy review process and fees, please contact us. And another frequently asked question that we get is, who needs life insurance? And so, Ro, I'll let you address that question.
Thank you, Celeste. I think an easy way to answer that question is to start off by asking the question, who does not need life insurance? And to me, the answer there is the Grinch. The Grinch is somebody who doesn't care about anyone or anything, with the one exception maybe being himself, but even that's debatable. So if we flip back to the original question, who does need life insurance? I'd say it's anyone who loves or cares about someone or something, and they want to make sure that they've been taken care of once they're gone. A good example of this is we have a client at C3 who I've known for many years, and he wears a lot of different hats in his life and his career. Now, he and his wife have been gearing up for a big remodel of their house, but he also had a big business opportunity come forth. And, fortunately, they have the resources to do both, but if something were to happen to him while these were ongoing projects, it would leave his family in a tight spot. So what he did was purchase some additional term life insurance, and it will last throughout the completion of both projects. In this case, you can see how life insurance allows him to take both the business risk and also make big, bold choices in his own life, and leaving his family, in the case of his untimely death, with the resources to finish both projects without any kind of adjustment to their lifestyle. To me, that's one way of caring about the ones you love. Another thing that we've seen here at C3 is people who will purchase life insurance where the beneficiary is a cause or an organization like a museum or a research foundation or maybe their place of worship. And when they die, the policy will endow their annual gifts to that cause. That's another way of caring for something that you love and value. So in both these cases, you can see that life insurance is a way to protect the people and the things that you love with a smaller investment. When you shift the risk away from you and over to the insurance company, you gain the ability to take those bigger risks and to live more boldly in the here and now. And I don't know any who's in Whoville that don't see the value in that. Carolyn, I wanted to ask you, can you tell me a little bit more about key man insurance?
You bet, Ro. That question comes up often when we're asked, do you provide key person insurance? And the answer is yes, because key person insurance is simply a life insurance policy ensuring the life of an owner or other team members that are critical to the success of a business. Pretty much like the example you provided in your answer, Ro. To determine whether a business should consider this kind of coverage, you can begin by asking yourself, who would be irreplaceable in the short term? Whose absence would cause major financial harm to the business? Think about those that handle key customers, who may also be assisting in guaranteeing business loans or managing other team members. If the event occurred and insurance funds are received, they can be used to cover the internal cost of recruiting, hiring, and training a replacement. This gives the business valuable time when they have much needed liquidity, which means really more options. In short, the death of a key person can be devastating to the future of a business. Life insurance, once again, is just a way to shift this risk to an insurance company. So the cost of a key person policy will vary according to the insured's age and overall health, just like other types of life insurance. The business owner is typically the owner and beneficiary of the policy and pays the premium. When you think about key person coverage, remember to think about key person disability coverage, and that this is also available and can be included in this type of planning.
Thank you, Carolyn. Appreciate that, those quick overviews. This is our 10th Coffee with C3. And about a year and a half ago, we did one on underwriting from 30,000 feet. And what we're going to do in December is do more of a deep dive into underwriting some experiences we've had. So with that in mind, I'm going to ask Lisa to jump on and give a quick overview of a case we recently encountered and the underwriting challenges she faced and how she solved them.
Yeah, so the underwriting advocacy is very important. We had a recent case. We went through the informal process and had offers ranging from standard to preferred. So we had the client examined, and once he got examined, the insurance labs came back with elevated liver function, which were actually 4 times normal range. The insurance company did some reflex testing and ruled out alcohol, or hep screen was also negative. So the underwriting offers now came back where they were standard to preferred. Now they're table B to table D. So we discussed with the client the possible causes for this, and it could be anything from over-the-counter medication, excessive exercise, taking Tylenol. And after talking with the client, we found out that the root cause was the excessive exercise that was followed by Tylenol to treat the pain from the excessive exercise. So the clients agreed to stop exercising and taking over-the-counter medication for 2 weeks. He's going to go back to his personal physician for new labs, and then the insurance companies are willing to reconsider their offers.
So I think
it's kind of a short,
the significance of that is it would have been easy to go back to him and say it's not standard as table 4, table 5. and
Mhm.
try to deliver it and get them to understand why. But instead, Lisa dug down into it and checked with the underwriter, went back to the insured, and just got some more clarity on what the situation was to give him confidence that it was worth going through the process to get additional labs done. So I think that's a good example of the way that Lisa and Suzanne, both in underwriting, go to advocate for our clients. So as I said, this is our 10th call. We've had perfect attendance. We've all been involved with organizations that really emphasize the perfect attendance. And we're proud to say that in 10 of these sessions, Jose Ibarra in Mexico City has been on every single one. So Jose, thank you for your attendance. Thank you for your confidence and for your reappearance on these calls. We really appreciate you being there and appreciate your feedback. We've got another event coming up in September, on September 20th at Arlington Hall down on Turtle Creek. Tom Rogerson will be coming in again. We're sponsoring with the Dallas Foundation, an evening with him where he is to learn about families and how they can steer their collective values and resources from generation to generation. We have found that family governance and family joint decision-making is a key to a lot of successful families, and Tom will be back for his second session. If you're interested in that, please give us a ring and let us know, text or email us. Then in addition, in October on the 26th, we'll have a CNC. We'll be following what Mindy Jones presented the last quarter about care for people who are in assisted living facilities or even at home care. And the doctor from UT Southwestern will be speaking on palliative care. He's a specialist in palliative care issues. I'm not going to try to pronounce his name, but it'll be at noon on the 26th. And then as we wrap up the year, we will have another CNC, Coffee with C3 on December 9th at same time, 8 o'clock, 8:30 to 8:45 on Thursday, December the 8th. I think I said the 9th. I'm sorry, Rebecca, you can correct me, but it's going to be the second Thursday in December. So with that, as always, if you have any questions, please feel free to go to the chat room, leave a question, or contact us afterwards. We'd be glad to continue to provide clarity, confidence, and coordination for you and your clients. Thanks for joining us today. Have a great rest of the day. Goodbye.